Hello and welcome to Virtual Investor Conferences. My name is Greg Young, and on behalf of OTC Markets, we are very pleased you have joined us for our next live presentation from RIO2 Limited. Please note you can submit questions for the presentation in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Alex Black, Executive Chairman of RIO2 Limited, which trades on the OTCQX Best Market under the symbol RIOFF and on the TSXV under the symbol RIO. Welcome, Alex.
Thanks, Greg, and thanks to the OTCQX for hosting this group of presentations. So I'm quickly going to go through this presentation. I've got 20 minutes and I'll leave 10 minutes for Q&A at the end. But I think it's going to be a very straightforward presentation. Obligatory reader advisory. So when you get a chance, you can have a read of that. This presentation's on our website. To start off with, this is a great view of our project. It's the largest permitted and fully financed gold heap leach project in the Americas, with nearly 5 million ounces of gold in M&I resources. So there's nothing like this anywhere in the Americas at the moment. And this was a project that was discovered back in 2010 by a company called Atacama Pacific, a junior gold company. They spent 4 years drilling this out to 5 million ounces, and then it went dormant from 2014 till now. So it's been on the shelf for 10 years. And it took for us to come along to work out what to do with this project and to take a plan forward. So we've recently permitted the project and we've recently fully financed the project. This project's located in Chile, in the Atacama region, close to Copiapó. Copiapó is the nearest regional centre, about 150 kilometres away from this project. And we're at an altitude of about 4,900 metres above sea level. That's the highest peak you see there, down to our plant site, which is about 4,300 metres above sea level, and then our campsite, which is about 3,200 metres above sea level. So this is high altitude stuff, no problem, been done by lots of mining companies. Chile, Peru is high altitude, and there's a lot of knowledge and capability to operate at those altitudes. Okay, so why RIO2? Because Phoenix Gold is one of the largest gold oxide resources in the world. We're looking at a staged development plan, 20,000 tonne a day order pad starter project, progressing to a phase 2, which we think is going to be around 80,000 tonnes a day. We still have to do an expansion study on that, and I'll talk more about that in a minute. And we're already in construction. So we financed this project back in October, and the day after, because a lot of people get in touch with me and say, oh, when are you going to announce construction? Well, we didn't have to announce anything, because it's the day after we got our money that we started construction. So we're well into construction, and we'll provide an update on activities in the near term. Proven management team. We've done this before. We had a company called Rio Alto Mining. That's why this company's called RIO2. We started Rio Alto as a $12 million Canadian junior in 2009, and we sold the company in 2016 to Tahoe Resources for 1.3 billion Canadian dollars. So we know how to execute and deliver, but we also know how to exit. And we made a lot of people a lot of money in Peru and in North America and in Europe who were shareholders at the time. Just moving on, management team. So when you look at this team, this is almost a continuity of Rio Alto, because most of these faces, apart from a couple, were in the old Rio Alto team. The board is old Rio Alto, the executive management team is ex-Rio Alto, and the management team is all Rio Alto. So it's as though Rio Alto never went out of business and never sold itself. We've just come across another project, and here we go again. Our structure is a little bit different to a lot of other Canadian companies. We don't have a big corporate head office in Canada. We have, at the moment, about 4 people in Canada, in Vancouver, working from their homes, not from any flash office. So our G&A costs are very, very modest. Our key technical office is here in Lima, Peru. That's where I'm talking from right now. I live here. I've been here for more than 25 years. And obviously, because we had our success with RIOFF in Peru, we decided to stay here and keep the team together. And now what we're doing is we're putting together a team of people in Chile, obviously Chilenos, to execute and deliver on this team with our oversight. So a good mix, good LATAM experience base, and we're all bilingual, so Spanish, English is our way of communicating. Okay, so the project financing that we did can be broken up into this pie chart that you see there. We have with Wheaton Precious Metals. We had to put together some equity. We took down a gold prepay facility with Wheaton Precious Metals as well for $100 million. These are all US dollars that I'm talking about. And we also have a cost overrun facility of $20 million. So you can read it all on that chart there on how you make up the numbers. We went into this financing that we did recently very successfully. We originally targeted about 40 million Canadian. We had the book more than 3 times oversubscribed at 140 million the next day. We then upgraded the book to 55 million. We then took an over allotment, which took it up to 63 million. Wheaton also contributed 5 million Canadian, so that took us to 68 million. And as of today, and given the fact that we've started construction and we've not drawn on any of these facilities, we're not drawn on the $25 million second part of the stream, nor the gold prepay. We're sitting on about 50 million US cash. So we decided to take more money than what we needed, and that was to I guess make the market feel comfortable that we're not going to be a junior that's going to go into a mine build and not have enough cash and run into problems. Not that we're expecting to run into problems, but we want to demonstrate that we're not going to have to go back to the market before we show our first bar of gold here. So, and you can see all the contributors to the use of proceeds on the left there. I'll let you look at that when you've got some time. Wheaton are our financing partner. They came into this story back in 2021 with a $50 million gold stream, which we drew half on back in 2021. So we have still 25 million of that stream to draw down on. You can read about that on the left-hand side of the screen. We then were able to negotiate a $100 million gold prepay facility with Wheaton Precious Metals in exchange for 95,000 ounces of gold. And this was their first prepay that they've ever done as a business. So we're a serial number 1 candidate here, and it just goes to show their support and their, I guess, validation for this project and their belief in what we're doing. They also provided us with a $20 million standby loan facility, cost overrun facility if we need it. We don't hope we have to touch that. And then the equity investment that they put in, as I said before, was 5 million Canadian. This is our capital structure, where our market valuation on a Canadian basis is less than 300 million Canadian. It's less than 250 million US. So for a 5 million ounce permitted and fully financed project, I think this is the opportunity that we present potential investors to this story. You can see our share price graph there. You can see we've had a pretty tough couple of years going into this construction phase and financing phase. Our EIA got held up by the government back in 2022. And you can see what happened there to our share price and what's happened since. So we've recovered. We don't give up. We're very persistent in what we do. And at the end of the day, we resolved our problems and are now in the construction phase. This is another view of our project. In the distance is the only mine in this area called La Coipa, which belongs to Kinross. We're in the Maricunga Gold Belt, prolific gold belt in the Atacama region. More than 80 million ounces of gold spread out amongst a number of projects. As I said, and I'm just going to whiz my cursor around, you can see La Coipa there, which is about 20 kilometres to the north of where we are. And you can see the Phoenix Gold Project, and then you see all these other projects. Serra Casale Caspice is Barrick Newmont joint venture. You've got Refugio, which is Kinross on care and maintenance. You've got Volcan and La Pepa. Volcan is Hochschild, La Pepa is Pan American Silver, Lobo Marte, which is Kinross. They keep talking about that being a development project they want to bring into production by the end of the decade. Let's see if they do that. And then you've got a couple of smaller other projects, and you can see Copiapó here, about 150 kilometres. We're right next to a main road. Infrastructure is fantastic. This is not about helicopters and pack animals or whatever. No, we're on a main road, 20 kilometres. Our campsite's at the junction of the access road, and this access road is 20 kilometres in length. I'm just going to the next slide. Here we can see some photos. Now, this was all done pre-financing because we had some permits in place that allowed us to get started on some of the construction. So you can see the leach pad there under construction, the plant platform. We're going to bring you up to date on this in a press release shortly. Our plant was fabricated and needs to be assembled. So you can see here a photo of all the pieces of the plant, the foundation. You can see the tanks have been fabricated. All they need to do is be assembled. So most of the CapEx is involved in assembly, civils and assembly job. Also a campsite, 565-man camp, which we built 2 years ago. Been renting part of that camp out to Kinross, who had an overflow from La Coipa, and other facilities here, mess facilities, and full infrastructure. But this is at 3,200 metres above sea level. In Copiapó, we have our water loading facilities for our water that we're going to truck to the project. That's a key component of the first phase of this project, is trucking the water. The highlights of our feasibility study that you see there, a lot of people ask, well, how do you make money out of a project like this where the grade's about 0.5 grams? It's because of the factors here that are highlighted. Obviously, the gold price is helping a lot. You can see our study was done at $1,750. Today, it's obviously north of 2,600. Strip ratio, this is key, 0.85 to 1. And in actual fact, in the initial years, our strip ratio will be closer to 0. So this outcrops at surface, it's bulk tonnage, and that's how you can make a lot of money out of half-gram dirt. The other thing is recoveries, 75% run of mine. So we don't have to crush, we don't have to agglomerate, we just blow up the material, truck it to the leach pad, and then irrigate it with cyanide to extract the gold. You can see our estimated AISC of about $1,250. That includes the cost of trucking water to the project, and it's all baked in. It includes the Wheaton precious metal stream that we've got. So all the costs have been loaded in. So at $1,750, it's got very good economics, but obviously at today's metal price, it's even better. This is a long section of the project. Now, what I also need to tell you all is that this is a presentation, a stock standard PowerPoint presentation, which you can get from our website. But also what we've recently done is we've made a quantum leap from just PowerPoint to Verify, the 3D modeling system that a lot of mining companies are now using for visualization, etc. I highly recommend everybody to go to our website, have a look at the Verify 3D stuff that we've got going, get a look at the view of our project, what it looks like from drones that we've flown over the top of the project, and that'll give you a feel for where we're building this mine. But this long section shows the ore body outcropping at surface. The blue line is the 1650 pit shell, which we used for the reserve calculation. And the black line is the $1,800 resource shell. Now, that $1,800 resource shell is probably going to become a reserve shell for the expanded project. And the strip ratio, I can tell you now, within that resource shell is about 1.2 to 1. So it's still very low, and this is going to be quite a big project going forward. Black banded quartz veins are part of the secret sauce in this deposit. Most of the gold, high-grade gold, is in these black banded quartz veins. This is all 100% oxide. There is no sulfides. There is no copper, no sulfur, no mercury. It's a very clean deposit, and it's drilled to 600 meters below the surface, and we're still in oxide. So it's a completely different animal to all the other projects in the Maricunga region. Our resources and reserves. The reason our reserve is small in comparison to our resource is because we've confined it to a 1650 pit shell. If we redo these reserves in the future at a different gold price, you'll see this swell to a much bigger number. With that reserve of 1.8 million ounces, we've got a mine at 20,000 tonnes a day that goes for 17 years. So it's a very long life project, but it's not optimal, and it needs to be expanded, and I'll talk more about that in a minute. This is just a project layout. Once again, go to our website, look at Verify, and you'll see some nice 3Ds of all this and how things are distributed on our project site. We're trucking water to the project. Why are we doing this? Because we advance this project by at least 4 years. If we were waiting for desal solution to this project, we'd be sitting on it for another four years or so, 3 to 4 years. So we decided, let's do something smart. Let's truck the water. All the costs are built into our feasibility study. It works. We're now looking at transitioning from diesel trucks to electric trucks. That, if we can do that, and there are some new electric trucks being developed by Mercedes-Benz that have a range of 500 kilometres. If we can get those trucks to work with this project, our op costs are going to go down dramatically, because of the fact that a big component of our costs is the price of fuel. So that's just a little snippet. And desal is really the solution for the future of this project, and for any project in Chile. Water rights used to be able to be gotten for subsurface water. That's now virtually impossible to do. And one of the things we're looking at is this ENAPAC project. If people follow me on Twitter, and you can find me on Twitter, anybody can find me there, you can see that I've linked people to this ENAPAC website, where a third party is talking about building this desal project, and we're likely to be a candidate to take water from this project in the next few years. So have a look at my tweets on Twitter if you are on Twitter. This is just MPV sensitivities. As I said to you, we did this at 1750. If you look at the current gold price, the MPV of this project's about 800 million US, and we're trading at less than 200 million US. So we think that's where the value proposition is in our story. We have to execute and deliver. Obviously, that's the key. And I think if we do, then you're going to start to see value come to this story. Okay, this is a chart. I'm not going to spend a lot of time here. Comparisons between ourselves and the only other two run-of-mine gold oxide heap leach projects that I can find in the world that are producing over 100,000 ounces per annum, right, in listed companies. And these are the two, Marigold, that belongs to SSR Mining, and Bald Mountain, that belongs to Kinross. And I invite you to just look at some of the numbers here, look at the comparison of strip ratios, grades, recoveries, ASIC, etc. for this project, and the size of our project. And this is just our starter project and what this project can become. So what we think this project can become is a project that will produce or produce material at the rate of about 80,000 tonnes per day rather than 20,000 tonnes per day. So fourfold increase. And with that, we should see gold production rise from about 100,000 ounces per annum steady state in the early years of production to about 300,000 ounces per annum steady state for more than 10 years. So this becomes a world-class project, becomes very attractive to a lot of bigger companies. And as I said, we sold our previous company for $1.3 billion back in 2016. So we know how to exit when the right sort of deal comes along. I'm just going to move ahead. So this just gives you an idea of what we've achieved and where we are. And as I said, mine expansion study. And obviously with that expansion study comes a new EIA for the expansion of the project. That's not going to be complex because a lot of the infrastructure for the expansion project is within the current footprint of the existing project. So we don't think we're going to have problems with the EIA process in that case. That's the presentation. Now I'll move over. We've got another 10 minutes and I know we've got a couple of questions here. And Mr. A says, what was the reason for the 2022 EIA rejection and how were the issues addressed? So very quickly, we had filed our EIA and were under evaluation during the change of government, which is not a good position to be in. So the Pinera government came to an end and the Boric government was starting back in this time period in 2022, early 2022. So what happens when a government changes? All the regulators change. Everybody changed. And they, from all the feedback that we had from the review process that we'd been through, because the EIA process took us 2.5 years, right? It wasn't a 5-minute job. So we had a lot of feedback, a lot of involvement with regulators, and everything we were getting was green lights. And then all of a sudden at the end, and this happens at the regional level, so decisions are made to permit projects and to approve projects at the regional level, not at the federal level. But for whatever reason, the regional people decided to go to the federal guys, which was the new Boric government, and say, we're just about to approve this project. Are you okay with that? And they said, no. Let's come up with an excuse. And the excuse was that we didn't do enough work on fauna, and they decided to stop our project and not approve it. We then went through a ministerial appeal process, which took 18 months, and we didn't do any extra work. All we did was we validated exactly what we had done and the fact that we had followed prescription of the EIA process in Chile. And at the end, all the ministers decided that we were correct, that we had done nothing wrong, and they approved the project. Unfortunately, we blew nearly 2 years of time, and that did a lot of damage to our share price, as I showed in that previous slide. And so we came out of it. Now, which is really strange, is we're a priority project in the Atacama region. There's talk about the Minister of Mines and potentially the President of the country coming down early in the new year to open this, the construction phase of this project. So we went from 0 to 100 in 2 years. But what that shows you is that at RIO2, we persevere, we don't give up, and we stick to our focus, which is to get this project into production, and that's where we are right now. So hopefully that answers that question for Mr. A. We didn't have to do anything additional. We didn't have to go and do more studies or anything like that. We just validated the fact that we did nothing wrong. Okay, Mr. D, what are our milestones and drill plans for 2025? Okay, milestones, we're going to come out with a press release shortly about where we're at. And then we're going to start to do regular press releases, and we'll start with a regular press release in January of next year to set the milestones, our timing, our budgets, how we're performing to budgets. We're also going to update Verify with new images in 3D, drone shots, etc. So everybody can see where this project's going and how it's going. From the point of view of drilling, we've got 5 million ounces of gold. So, we're not in any hurry to do any more exploration drilling, but this project is open laterally and at depth. And one of the things we'll do is that when we get this project to production, which is going to be around the end of next year, I guess that's probably a milestone we should all be thinking about, is that first gold should be in December or January or somewhere around there of next year. Once we get to production, we'll start to do depletion drilling and drill out some of these extensions to the ore body. Okay, I've got 5 minutes left. Mr. J, how supportive to the mining industry is the current federal and regional government? Good question, and that's a lot of people ask me the question. So after all the crap that you went through in the last 2 years, is Chile a good place to do business? And I say most definitely. Chile is very much open for business. We were in the wrong place at the wrong time trying to build a new mine, right? And the government came in on a very socialist / communist, I guess, ideology. They didn't want to see any new mines being built in the country. They wanted to change the constitution. They wanted to change the tax regime. That all failed. And they've been pushed into the center away from their leftist ideals, and are now firmly centrist for the remainder of their government, and in Chile, the government only runs 4 years and then it changes. No repeat. So this government will be gone in a year's time. At the end of next year, it'll be gone, and we'll have a new government. Obviously, Chile's been centrist for probably the last 30 years since Pinochet. So yes, Chile is very much open for business. Yes, it is supported by the government. As I told you, we were allowed to go forward through this ministerial appeal, which was obviously, government ministries. And the regional government, they've always been for this project. We've always had community support plus business support. The Atacama region has some of the highest unemployment in the whole of Chile. We're going to be employing amongst ourselves and our contractors about 1,200 people during the construction phase, and then about 550 people during the operation phase. We're a big contributor to employment in the area. We're now recruiting good young professional people, engineers, geologists, technicians, etc., to build this mine. 180-degree turn. It's been a 180-degree turn, dramatic. But yes, it is very supportive now. Everything's very supportive now. So I don't think we have any more questions. I'm at 28 minutes. And I thank everybody. Now, if you want to ask me any questions offline, you can always contact me through my email address. I always answer. My email address is alex.black@rio2.com. alex.black@rio2.com. Please send me an email. I'll always answer. Whether you own 1,000 shares or 1,000,000 shares, I don't care. I'll always respond to your questions, and don't be shy to contact me anytime you like. So I very much appreciate the team at OTCQX for hosting this group of presentations for the sector, and all I can suggest is that people look out and watch us as we evolve from being a developer